So let's have a look at our summary then for our introduction to groups. So the main thing is to remember this is a really important chapter that you understand to get the basic idea of what our consolidations are all about. So make sure you're happy with, at this level, the very basic difference between a subsidiary, associate and an investment, but don't worry about them too much because we will look into these in a lot more detail in future chapters. Make sure you do understand how to decide on control, particularly for objective test type questions. Generally, for the longer written type questions, using more than 50% of shares is going to give you control. But objective testing questions may dig down into the definitions in a bit more detail. So make sure you're happy with the criteria for control and those definitions that you've got. And then just going over the parents and the group financial statements. Remember, the parent is the company that buys the other company. And so therefore they would show their investment in the subsidiary just as an asset. I purchased these shares. I'm going to show them on my accounts. And typically for our exam purposes, when we're doing group accounts, we would show them at cost. In the group financial statements, remember this is an extra set of accounts that has to be prepared in addition to the parent's accounts. And remember what we're trying to do here is we're trying to present the two businesses as one single economic trading entity. We're reporting back up to the shareholders of the parent company, and so therefore we only see the parent company share capital in our group accounts. And then this seems to be an errata in your workbook. It may have gone by the time that you're looking at this, but if you've got this erroneous page here in your summary, this is obviously for some reason accidentally being cut in here from the revenue chapter. So therefore, please don't get confused about this and think this is anything to do with group accounts.